Hey everyone, Dan here. We are during Power Hour on Thursday, June 17th. Today we're going to do an update video on Jumia. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also feel free to leave your comments below with thoughts, opinions, ideas, questions, tickers you'd like me to cover, or whatever else you might have. I look at those every night, and it might take me a few days to get back to you, but I'll do my best. All right, so Jumia covered this many moons ago, covered it a few times along the way. You know, it obviously has had this wild ride, this big crash down since about February, when a bunch of the growth stocks started to have challenging times. Today it's having a nice green day, as a bunch of these growth stocks are recovering a bit today from the beatdown that they took yesterday when there was the fear of what the Fed might do or what the Fed had said. But it's doing all of this without really having a big bump in volume. So I think one of the next major things, I think a big theme for this in terms of like whether or not Jumia can reapproach that $70, near $70 top that it had before, and overcome that price point, will be how much hype and volume it can build over the next 6 months. I think that that'll be key for Jumia to get into, as well as establishing a bunch of the support levels that we're going to talk about as we go through the chart. But to me, that's the big one. News about partnerships, additional good revenue numbers and earnings reports, when those come out, those things will go a long way, because we do know that Jumia as a company has a relatively small market cap as it pertains to the size of the market that it has available to it. And so there's a bunch of room to grow for sure. And Africa is definitely a tricky place to try to roll out an Amazon equivalent. And so there's a ton of challenges to overcome, but they are certainly the best position to do it at the moment in Africa. And so that's why I thought that they are at least worth taking another look at. And I've been playing Jumia for quite some time, so I would love to see them make another run back to 70, maybe even before the end of the year. But let's take a look at the chart and see what that looks like before we get too much in the weeds. So these zones, I left them here just because they were actually there from the chart that I did many weeks or maybe even many months ago. But this is just to show, it bounced nicely off of that stop loss zone. It dipped about almost $2 below it, so it definitely stretched. But then it built nicely off that 22.19, established nicely at this 27.11, which it retested recently. But these zones have held up really well. Obviously, these draw back to previous price activity that was going on in 2020. So they're very strong zones. So looking ahead from here, I think first I want to point out this downtrend that Jumia was stuck under for a long time, and it has recently broken out of the downtrend, basically made a little bit of a channel run up. I won't draw the channel, I'll just draw the trend line run up. So it ran up this trend line, and now it's pulled back a bit. And the question now is, is it breaking out again? And was this just essentially a little bit of a bull flag that it put in? Though it wasn't that steep, but that's okay. It's undergone a lot of selling pressure over the past several months. So understandable that, future bullish runs might begin quite cautiously. And, but, it definitely has broken out of this longer term downtrend. And now I'm interested to see if it can basically sustain breaking out of this downtrend, where it has just started to basically poke some wicks out the top of that downtrend line. But it really needs to establish over it and start to gain some distance from this if it's going to actually be able to make another run, in my opinion. Let's take a look at what that run might look like. Some support levels near and some price targets far. So if we take into account, we should take into account this 6-month picture because there's a bunch of really nice zones since it's done this sort of like, I guess, sort of a big sad face, which is sad, of course, but but it leaves us a lot of nice price targets to be able to identify. So 32.42 would be the next big one that I'd be looking for. Previous support here, support here, support here, resistance there, resistance here. So again, if you're not familiar with these videos, any price zones that turn previous support or resistance into future support or resistance, but something that accomplishes both at different time frames is a really, really strong level. There's just historically a lot of supply and demand pressure in those zones, and so there's often a lot of movement toward those price targets in the future, then acting as future resistance and support. So 36 on the way up would be another price target that I would look at, and we'll talk in a minute about how you might be able to use some of these price targets to take entry points and kind of like try to do your best to take those entry points without feeling like you're chasing the stock. If you have a tendency to chase the stock, we'll go over what I call dip buying into price strength, which can really, really help you make smart entry points with nice risk to reward ratios, nice sort of risk management built into it without chasing the stock. All right, so these are going to be my price zones up, and then of course above this you would be in the $70 range. That's the goal. These are the stops along the way that I would see. This to me is the path back. And talking about, a lot of times with especially what growth stocks have gone through since February this year, everything is in this big downtrend, and it's sort of like, well, this feels like, it feels like it's great to have a plus 5% day, or it feels great to have caught this run from 21 up to 33. But really, it's still such a long departure from the huge sell-off that this has had in recent months that a lot of folks are still quite skittish about taking longer-term positions on these without seeing the stock develop more consistent, what they feel is real price strength. So if we take a look at dip buying into price strength, what I mean by that is you could choose one of these targets to the upside. Say you're thinking, okay, if this can make a run at 36, I will start to feel like, maybe it has some price strength. It doesn't have to be 36. You could choose any of these. You could say, okay, if it makes a run toward 50, or that 49, 48, then I'll believe that it's finally starting to recover. But let's just take that 36 for an example. So let's say in the next few days, it guns it for 36.66, and just shy, it starts to feel the selling pressure, folks taking profit, and it starts to dip down a bit. Now we know that there should be good support at that 32.42 level because of all this previous resistance and support that we just pointed out a minute ago. So you could say, my hypothesis as a trader trying to preempt a price move, I'm going to let it reject or hit resistance off of that 36.66, and then I'm going to start to average into the trade, maybe around 33.50, something like that, and dip buy it all the way down to 32.42. And then maybe I'm going to pull up my ATR indicator, and I'm going to say, okay, ATR is at 0.91, so I will set my stop loss at 0.91 below 32.42. And that is how you can dip buy into price strength. So if it plays out how you want it to, you will dip buy all the way down to 32.42 if it stretches that far. That's why you start to enter early, because it might not come all the way down to that support zone. It might be strong enough that it doesn't quite make it all the way down there. But what you're looking for it to do is catch the dip buy there, and then it comes up, maybe it struggles around, this area again a little bit, waffles back and forth, and then it makes its next run up to the next price target. So you bought on the price strength, but you did it in a logical way that you knew why you were dip buying it there and what the goal was. And you set your stop loss at a reasonable level underneath, just 91 cents below the support zone based on the ATR, and that gave you an opportunity to really limit your losses to the downside if it couldn't hold that support zone, and then risk falling, back further toward 27 again. So that's what I would look for in the coming days, weeks, months, however long this plays out. But to me, the potential from the perspective of the industry, the company, the space in which Jumia occupies, I feel like it does have the potential. I know there's definitely speculation out there about sketchiness that the company is involved in. I haven't been able to see that the realities of those outweigh a lot of the potential upside that I see in Jumia. But that could always change. So it's certainly something to keep an eye on. But if you correctly manage your entry and exit into Jumia, I think you could certainly catch several waves to profit from. And it's a big stretch to get up into the 70s again. But this was a really aggressive run up. I mean, that if you say it started, it started way back here around $8 on October 6th, and it accomplished that in February. So really just about 4 months to accomplish 8 to almost 10xing its price. So pretty nuts. So now you're looking at, 2.5xing the price over the course of 6 months or something. I certainly think it could happen. It's going to take a lot of volume. It's going to take a lot of good press, good earnings, potentially some partnerships, things like that. On the indicator side of thing, the RSI is midline, so definitely could provide additional buying pressure coming in. It is rising up from recently being oversold, and on the MACD end of things, a slightly bullish crossover. Not too bad. Could be could offer a steep upswing if this can hold. It's curling back a little bit because of this red candle here. So I have to see if this can sustain or if it's just going to be sort of a short-lived thing. But that's what I would be looking for. And if it does make another run down toward 27, me personally, I would take that as a really good dip buying opportunity. These zones were green originally in the video because I was thinking that these would be really good dip buy zones. And of course, had you dip bought in those zones, you would have, done pretty well, running from about 22 up to about 32 over the course of about 2 weeks. So that's my path. That's my path back to 70 for Jumia. Hit these support zones, turn them from resistance to support as you go through, and get some volume, have good earnings, build some partnerships, have some good press come out, sort of quell any of those sketchy questions that folks have about the management or the leadership of Jumia, and get back up to the days of nice, big, bullish runs. So, to be seen. It's all a hypothesis until it's real. And so it could certainly go either way at this point. So I would definitely keep your risk management in order. All right, well, that'll do it for this one. I appreciate you watching, and I wish you the best of luck. I hope you've had a good week trading so far and that you can finish off the week strong. I will see you in the next video.